We shall look at an example of mortgage. In our previous class, we mentioned that one of the methods of financing real estate businesses is called mortgage. That kind of loan is called mortgage. So normally when you take loan, how do you pay it? I know this is something that you'll be taught in FR. They will teach you in FR, or maybe you have done it already. Amortization schedule. So let's look at loan amortization schedule, mortgage loan. We are trying to look at how companies or banks normally determine how much you will pay monthly. Wakati umechukua loan, Ruth, can you hear me, Topista? Wakati umechukua loan kwa bank, unaona wanafanya vitu kwa system, then they tell you will be paying 20,000 per month. What did they do? What did they do? That is what we call amortization schedule. So have an illustration here. Where consider a situation where somebody has taken a mortgage loan, consider a mortgage loan of amount. So we have amount of loan to be 10 million. Amount of loan to be 10 million. And then we have number of years, repayment period. Six years. Repayment period 6 years. And then we have rate of interest. Rate of interest to be 14% on a reducing balance. On a reducing balance. So this is a situation where you're taking loan from the bank. Those who are joining, this is where we have started. You can take the screenshot. Jen, kindly take a screenshot. Henry, welcome. Edwin, welcome. We are looking at a loan amortization schedule, and we are assuming that you have taken a loan of 10 million for a period of 6 years. The agreed rate of return, or we call it interest, is 14% on a reducing balance. This is a normal thing that happens whenever you take loan. And then you're being told that required, prepare a loan amortization schedule. Prepare a loan amortization schedule. Those who are joining now, kindly take a screenshot. So prepare a loan amortization schedule. So what are the solutions? First, you need to know how much are you going to pay as installments. As installment. You see, installment is something that you pay every month. Are we together? Every month, you're going to pay installment. To the banker or to the bank or whoever has given you the loan, that installment that you're paying is an income. It is a cash flow that is coming to them. Are we together? It is a cash flow, and to them, it is a regular cash flow because you are paying the same amount every month for 6 years. So you know what happens with the regular cash flow. So don't look at it from your point as the loanee. Look at from the point of the lender, the person who has given the loan. To him, he considers as a regular cash flow. So installment will be regular cash flow to the lender. And how do we normally get it? If we want to know the regular cash flow, so let's say that you want to know how much you're going to pay at the end of the period. You always say that A is equal to the amount that you're going to pay, right, times 1 plus R N. That's what you normally do. But if it is regular cash flow, we can now say that that is the installment. That is the installment that you're going to pay. So the amount that you're going to pay at the end of the year will be, the amount will be our installments will be the amount which is loan amount or lower PV fund. This one is just the same as this. You can make P the subject matter. So P is the installment, it is the regular amount that you are investing here, but if you are paying it, it is a regular amount that you're paying. So P is equal to A all over 1 plus R. Sinakonga hivyo. Normally we have, in this case, the amount that you get at the end of the year when you are investing somewhere and you get an interest of a certain amount for a certain period of time or a certain percentage for a certain period of time. If you are investing amount that is regular, then to know what you're going to get, you can always use this formula. So the total amount, which is A, is equal to the amount that you're investing every month times the discounting factor. So if you want to know how much you're investing every month, you start with P. Make P the subject of the formula. So P is equal to A all over this. Now, in this case, the intention is to pay the loan amount. So you know the amount that you're going to pay. You know that you're going to pay 10 million. So the expected amount that you're going to pay as a loan, total amount of loan that you're going to pay is now this one. Therefore, we can also substitute. Instead of now saying that loan is equal to installment, which is now the cash flow, times PV per, we can now make it this way. We make installment, which is the cash flow to the lender, become the subject of the formula. So that we have installment is equal to the total loan amount that you pay, the total loan amount that you pay all over PV per. Does it make sense to you? Ruth, does it make sense to you? Florence, there is nothing I've introduced. This one is just a question, and this is now what I'm introducing, and I've done it when you are there. So hakuna kitu nimefanya kama hujaingia, na ndio maana nimesema copy the question, then come here. So I'll repeat. Now that tumesema hujaelewa, I'm repeating. So what I'm saying, Florence, is that assume that you have total loan that you're going to pay, the total amount that you're going to pay is 10 million. The prepayment period that you've been given, or the total amount of loan that you took is 10 million. Repayment period is 6 years. The rate is 14%. This is the normal terms and conditions of loans that we normally take. Now, I'm coming to this side. When you want to invest regularly, let's say that you want to put fixed deposit, you always know the amount that you're placing, but you don't know what you're going to have at the end. So the total amount is normally the amount that you're placing, or the amount that you place times 1 into R, 1 plus R into N. That is how we do it. Still, this is the amount that you place, but this one is a one-off thing. So if we know what we're going to get at the end of the period, then we can always make P the subject of the formula, so that you have P is equal to A all over 1 plus R. Similarly, When we are getting our figures, we always want to know the total amount that you're going to get at the end of the period. We can say that our present value, which will be the total amount, should be the cash flow times PV. This one you understand, right? You understand this? Cash flow or cash value is the amount that you invest regularly, the same as the installment. This cash flow is the same as installment. Kwako unailipa, lakini to the bank, they are receiving it. So it is installment to you, it is cash flow to them. It is regular, the same. So therefore, we are having PV path. Now, that one will be able to help you know the total amount at the end of 6 years at a certain rate that you are going to be given. Now, in that case, if we know the present value, this is the present value, it is 10 million that we are taking now, the same as present value here. So we are saying that our present value, which is 10 million, is equal to the installment, which is the cash flow regularly. So installments times PV. We know that it is regular, not irregular. Therefore, you can easily get with the present value, because this is the present amount of loan that we're taking today. So it is the present value. We can easily now make installment the subject of the formula, so that we say that installment is equal to 10 million, which is now our present value, along PV. In our earlier illustration, we said that this one we call it loan amount, along PV. I haven't done any mistake, because this is something that you are quite familiar with. As well, you are quite familiar with this. I just decided to make the cash flow be the installment. And because it is regular, you understand that we're going to use PV. You can now make installment the subject of the formula. With that information, I'm hoping that someone has understood my illustration this time around. Thank you so much. I just want like 2 people to understand, because the rest will also understand. It's only bad if I proceed and nobody understood. Can I say that somebody got it now? Topisa, Jen, are we at home? Jen, Mercy, ameelewa, sio? Good. Now, we are saying that when you're told to make a loan amortization schedule as a banker, what do they do? Florence, wakati umechukua loan kwa bank pale na ukasema monthly salary ni 40,000, wanafanya analysis alafu wanakwambia with 40,000 the minimum you can pay is 39. How much do you want? Nawaambia you need 1 million. Then they come and do some miracles. These are the miracles. Then they tell you, no, 1 million you cannot take, because that means that you'll be paying 26,000 a month, and your takeaway will only be 14. You cannot survive with that. So nakwambia, no, you cannot go with that. Kama hiyo ndio salary yako. What they do, this is what we tell them: monthly installments. With this information, can somebody now tell me the installments?
Masusi, lakini ndio jina linavyoitwa double pool, yeye ndio hizo projects.
What is the value of the BIFA? Florence, are you getting the same thing? Get me Vivipa 14%, or you can say 6 years, 14%. What is the value of Vivipa loan? So you're going to have 20 to 57, 157, 4.95. So it means that monthly you can be able to pay 2.5 million. That is the first step. That is the first step. Now, after that, the next thing, are you sure it is correct? Can somebody get me the exact figure? What you are getting when you calculate the exact figure? Because I'm getting different answers. Somebody has given me 1 point. Who was that? Ruth. 2.571553. Florence is giving me 2 point. So who is saying the truth? When you divide this and this, what are you getting? Hatutaki bring confusion. We don't want to bring confusion. These are very simple calculation. It's a very simple calculation that anybody from Maseno can do. Anybody from Maseno can do. Thank you. So the correct one is not this. We don't want to allow error here, because if you allow it, itasumbua tukiendelea. So thank you so much, Mercy. You are saying that it should be 71,533.47. Fine. That is the first step that you will pay monthly. So let's make schedule so that we see. Now, somebody, for those who are doing audit, ukienda audit, alafu upate maybe your client has taken some loan. Unamuuliza, can you share with me the loan schedule? That is what we're going to prepare here. They are normally provided by the bank to the person who is borrowing. So bank will tell you, this is the loan schedule, this is how you're supposed to pay monthly. So as an auditor, you need to check the loan schedule every year, how they should be paying, and then you compare with what they are paying in the bank. Unaangalia vile wanalipa na ile ilifaa walipe. Ukiona kuna difference, then that can tell you that this company has got financial problem, because they cannot follow what they agreed on as per the schedule. Let's now prepare the schedule. So we normally have the loan that was taken. You can call it the beginning balance. That is the initial amount of loan that you took, beginning balance. Then we have installments that you're paying monthly. They are the same, right? And then we have the interest that you're being charged at 14%. Then you now have the principal amount, and then you have and the balance. So what we're basically saying, Florence, is that when you take a loan, the amount that you are going to pay, they are going to divide it into two. Part of it will be paying interest, part of it is paying principal. Principal is the amount that you took, lakini itaendelea kuzaa some interest. So when you take a loan after 1 year, itakuwa the principal plus interest. Whatever amount that you're going to pay, will be paying interest and principal. Normally, the rule is that when they are collecting money from you, they start by taking interest. Wanachukua ka profit first, ili itabaki ndio wanalipa nao principal. Ndio principal isiishe haraka. Ikiisha haraka haitakuwa inazaa, na ikizaa inazaa mtoto kadogo. So they always want the principal to remain iendelee kuzaa because they are getting from you. Na wataki iishe. So whatever amount that you pay, the bank will always start by taking the interest. And then if there is anything that is remaining, now they deduct the principal. So that is why we are having the interest first from the installment, the interest first and then principal. So now it is the principal that will be deducted from the original loan that you took. And Florence, usitake time sana, tutaki kufika saa 5. Ulisema tumalize mapema. Endelea.
Dennis, here we are revising. We can even ask questions for us to know. I have a question. How comes when someone asks for a loan, akichukua hiyo loan, ameambiwa loan ni 1 million. Then after, no, there's a loan ni 1 million. Then later on anaambiwa akichukua hiyo 1 million loan, atakuwa analipa pesa na hiyo pesa itafika even 1.5. What brings this issue of 1.5? You see, loan ameomba loan ya 1 million. Akaambiwa for you to take this loan of 1 million, there's an additional amount of 500. So how comes? Because there's a friend of mine alichukua loan, then all of a sudden akiadi hizo pesa alilipa 1.5, akasue the bank. Imweleze mbona analipa hizo pesa na loan yake ilikuwa 1M. Thanks.
Sasa wewe ukichukua loan, do you know the main role of the bank is to accept deposit and pay and give loans, right? That is what the bank do. Their primary role is to accept deposit from members, and then they give that in the form of loan. Wakikupea loan, there is interest that you pay. That interest is what becomes their main income. So that interest ndio ilifanya hiyo loan ipande. Sawa sawa? Yes, loan ilikuwa 1 million, lakini ilipanda. So at the end of the day, remember you are paying principal and you are paying loan. Principal and loan. So that nini interest. At the end of the day you accumulate, unapata imeshinda principal. Huwezi rudisha vile hivi. Sasa if you pay back exactly the same amount, then walikuwa nafanya na wewe biashara gani? Florence, ni kazi gani unafikiria bank alikuwa anafanya? So that is basically interest. So okay, so let's start with 10 million. So we are saying that in year 1, so we have here. Na here I'm sure haiwezi shinda because the only law, there is a rule that says that when you take a loan, you cannot pay, or the interest should not grow more than the principal. Sawa. Yani nikichukua loan, let's say nikichukua loan ya 1 million, alafu nikose kulipa, nimefail kulipa, si the bank wataacha izae interest. That interest can grow. Ikifika 1 million, which is equivalent principal, so I'll be having a total of 2 million daily. Wanna stop hapo. That is a law. So hata ikikaa 20 years, 100 years, the interest cannot grow. Hata bila mimi kulipa, it cannot grow more than this. Lakini nikifanya tu makosa niendelee kulipa kidogo, ina grow. Zile nimelipa are going to reduce this. So let's say nimelipa 500. Hiyo 500 itakuwa ina cancel hii. Inazaa tena another 1 million. As long as haijapita 1 million haina shida. So it is good. Ukiamua kulipa, lipa umalizane nayo. Ukikataa kulipa, achana nayo. Ile siku utapata pesa, you come and clear. But don't be convinced by any banker. Hata kama umeshindwa, lipa tu kidogo, itakuwa inakunywa maji. At the end of the day, you will calculate ile pesa umelipa na ile ilikuwa ulipe is more. So we are always protected by this that rule, right? Yes, we are always protected by this. Ukiamua kulipa, lipa. Na ulipe kulingana na loan schedule that you agreed on. If you cannot pay, just avoid it. In fact, right now there are rules that even if you are having interest, those who are working in a bank, if interest has been accrued for more than 6 months, then you need to stop reporting that interest. Why? If you keep on reporting that interest, when you get interest, you normally credit income, interest income, and debit interest receivable. Sasa, that is accounting. So this interest is receivable. Lakini you have failed to pay it for more than 6 months. It means that you are going to exaggerate your income. At the end of the year, you'll be including my liabilities as part of your income and say that you made 10 million income or 1 million. In reality, you are only accruing, but I was not paying. You have not received this money. How will you pay dividends on the amount that you have not received? So it's again advisable that if somebody fails to pay for 6 months, stop accruing interest. You're going to exaggerate your receivable and you're going to exaggerate your income because you're going to show what you have not made. You cannot pay dividends of this amount. Hauna pesa. So stop it. So apart from you being protected by this, you are also protected by this. Buyer beware. So ukiona imeshinda 6 months and they continue accruing, auditors will tell them stop accruing. Auditors will come and tell them stop accruing. Don't charge more interest on this person because you are going to exaggerate. So utaona wamenyamaza wakifikiria you are wasting their time, they come and start pushing you. Kindly pay your loan. Ukiweka tu kidogo hivi, inactivate the aging period. So they start accruing again because now umeharibu ile 6 months ulikuwa umedelay or umekataa kulipa. So they are saying now they can charge you again. So nakuwa mkora. So let's start with 10 million. 10 million. So this 10 million, we say that the interest that you're going to pay at the end of the year is going to be 2,751. 533.475. That is the installment. But how much is the interest on this amount? At the end of the year, utalipa hii pesa. Lakini pesa ngapi imezaa? 14% of this. 14% of this is 1.4 million still. I would try, should be 1.4 million. Na tufanye haraka ndio tusiweze time sana, please. We have like 1 hour to go.
1.4.
1.4, thank you so much. Now, if it is 1.4, that is the interest yenye imezaa. Na wewe mwenyewe umelipa 2.5. Inamaanisha, out of this, they will first take their interest, the balance wanakuachia kama principal. It is that principal that will reduce your liability, ile loan ulichukua. This one is a principal loan. So when we talk about principal loan, ile ulichukua, they will have to take the interest first, the balance, ndio sasa inapunguza hii. And that is why we call it reducing balance. Because the next year, they will only check interest on the balance after deducting that principal. Now, for us to know how much is the principal, you simply take the total amount that you paid minus interest, you will get the principal. Can you try that? My phone has gone off. Somebody can try that. I don't have calculator. Let me see. Don't know where my calculator is as well. Nasema ukilipa hii pesa, part of it watakata kama interest, the balance itakuwa principal. Kwa hivyo calculate for me this minus this, what is the balance? Mimi nikiona hii inakaa 1.17153.475. This is now what you pay as principal. Deduct it from this toy. Nabaki na ngapi?
Correction. The installment should be 2,571,553, not 533.
553. Sawa. So then this one also we need to change so that we have 1,170,1,5,5,3,4,75. Now deduct this one. Ukipunguza na hii, what is the balance? You're going to get 8. Eight what? We're almost done.
8 million.
Soma. 88.
8828. 446.525.
That is our new principle. That is the end. Hiyo ndio neno umebaki nayo at the end of year 1. Sasa unakuja year 2, it is the opening now. 88, 28, 446.525. Higher. Charge interest on this. 14% of this. Because it is on reducing balance. The rate was on a reducing balance. So this is the balance that has reduced. Charge it. What is the 14% of that?
1235.
535?
1235.
Uh-huh.
982.
Mm-hmm.
982.513.
So that is the interest on that loan. Now, remember you paid this one in year 2 as well. So toward E, this one from this. What is the principal when you pay this? And this one has been taken as interest. The balance principal. End balance nimepata aje? End balance. How did you get it? We took principal. This is the principal. And this is your principal. So just take the principal. Interest achana nayo. Hii imeenda tu. Hiyo ni profit yao. Ile pesa unalipa is the loan that you took. Hii. So if you pay this, the first check the interest. The balance is what you're now reducing from this. So you take 10 million minus this. Unapata hiyo. That is a balance principle. You don't deduct the whole thing. Sasa. This is the principal amount that you took. Deduct the portion of the principal that you are paid. The balance new. So it is 10 minus this. The same thing. Now here, we want to know how much is the principal. Because we are saying that installment is the same for 6 years. So you are paid this one in year 2. And on the amount that you paid, the portion of interest is 1.2. So what did you pay that relates to principal? It is this one minus this, you get the principal. Then now take principal minus principal, you get the ending balance. So proceed. Get me the principal. Ninaona hapa ni 12, 1.2, 2.5, so 3, 1.3 something. Get me this 13.13, 1335, eh? Now you 13, this one, you borrowed here. So you may reduce, so you reduce, this one is 0. 0 minus 5 is 5. Hapa nimebaki 6. So 1335. Can somebody help me? The ending figure should be 2, followed by 4. No, not 4. 2 followed by 6, 9. So 0.96. Okay, so 570, 962. That is now the portion of principal that you pay. For us to get the ending principal, check now the original principal that you had at the end of the year, minus the portion of principal that you pay. You get the remaining principal that they will now charge interest on. And that is why they call it reducing balance. Now they charge it on the reduced principal. Now take for me 8.8 minus this. Calculate that. 8.8 minus 13.35. 1.335,570. Utapata ngapi? Najua 8. This one will be 8.5. 7.5. 8 minus 1, 7. 8 minus 3, 5. Ama tutaomba, so it will be 4. 7.4 what?
749, 28, 76. Though me, I have truncated my figures.
Let's just move on without truncating.
749, 28, 76.
85875. Point 563. 563. Well, umesema, is it the same thing? 563. Lawrence.
Mine is 749, 28, 76. I have truncated.
Oh,
70.
so they're the same. So let's proceed.
I have 14%.
Yes. Oh, now this one.
Yes.
Umeshika rada. Sasa ukienda mbali hivyo, wale hawajaelewa vizuri, unataka waende wapi? Kuna wale bado wanashika rada. Na hii nawaambia hii ni the same. You can even write them up down. Haya, nipe hiyo percentage sasa Florence. Sasa we are getting the interest portion for this one, this reduced balance. So what are you getting?
14%, it is 1049,003. 1049,003. For me, I have truncated.
Get me the full figure. So it is
2.64.
2.64.
Exactly. 1049,002.6.
You know, that is a product of truncated value. So you might be far from what it should be. 579. Yes. Because that happen will truncate. So whatever you're giving me is a product of already truncated value. So this one here, top list in that was 579. So get the difference now, Florence. This one minus this. This minus this. When you pay this one and we have taken our interest first, what balance do you have as the principal?
6,443,000.
Huh?
6 million.
Hold on, 2.5 minus 1 million. Napata aje 6 million?
Pole, I was giving you the third one.
No. Pole pole. That one nitaandika. Get me the principal.
1522. 550.
Copy?
550. 0.896.
550.896. Okay. Now, Florence wanted to give me the balance now. The end should be 600. 7.4 minus 1.5. Now get me. This one minus this. Napata ngapi?
$5,970,000.
5,070,000.
970,326.
Okay, 5,970,326.
26.
Point.
So those decimal points someone can give out.
5,970,324.668.
324.368. Okay. So now we are coming to Japan. You know, the intention is that at the end of 6 years, inafaa umemaliza hiyo pesa. Na kama imebaki some decimals, something that is insignificant.
It should be 668, not 368.
Should be 668.
Yes.
Not 368. Eh? Okay. So okay. You pay this one again every month. Florence get me the interest on this. Don't truncate. Is milk around here today?
Interest is 835,846.
My mouth will truncate again. So that is 8.4, 8.5. I know I'm a truncate, so it is 8.5, 45 feet. Yes, hiyo figure ya Florence ya Mercy iko sawa. So Mercy, get me the correct figure. Najua Florence ame truncate.
0.4535.
Or 5. Get me the interest. This one minus this. 1.7 something. 1.735.
1,735,708.021.
0 to 1. For sure, that is what it is. 0 to 1 like that. Unajua naangalia hapa ilikuwa na 4 decimal points. Hapa ni 3. So I'm expecting something like 5 ikuwe huko juu. 215, eh? Professor. Hapa ni 475. Hii ni 4535. Obviously, hapa ni 0. So when you want to subtract 435, you have to borrow. Then, so here, you must be having 5. So, sivyo ndio hesabu inakwanga. Haya, get me the final figure. Now 5.9 minus 1.7. So that should be 4.2.
Okay, excuse. I think the answer ni venye nilikuwa nimekupea 0.022, not even 0.021.
No, but there is a decimal point at the end. So there is a 4-digit figure at the end, making it 5. So just proceed to near it. Because what I'm saying is that this one minus this, okay, is 0.475, and then this one is 0.4535. So hapa hakuna kitu, hapa hakukuwa na kitu. So it means that for you to calculate it, you have to borrow, you have to assume it is 0. Borrow 1 from here, inakuja 5. Hapa imebaki 4. 4 minus this is 1. Hii ni 2 minus this one is 2. Hapa ni 0. Si kitu inaeleweka. That is what I'm given. Don't round off. Ama hesabu ya class 3 nimesahau. Sisahau. Yes, sisahau. Borrowing 1 from the neighbor so that you can have a sufficient. That one I know. Don't worry, Mercy. Now get me. This one, I have this. I know you're also rounding it off, which is fine. Just proceed. We want to be as more accurate as possible. That is why I'm insisting on the decimal points. Just let them roll. Okay, so just move on. Hatuwezi kuhamia hapo. Just move on. Just tell me this one minus this. What are you getting? Achana rounding. Which kind of calculator are we using? That cannot just subtract this one from this. Now, pattern. Without rounding off. So getting 645. Again, the same issue comes in. Somebody else to try? So you guys are surprising me. 66.8 minus 0.215. Obviously, this one is 0 again. You can't borrow here. This one is 6. This one is 4. This one is 6. That is the answer that I expect at the end. Don't round off. I expect this. Don't round off. Hii inaonekana tu. Hii na hii. The same thing that happened here and here. So I can pick it the way it is. You're having 4. Ruth, hao wamekataa, lazima round off. Isipo round off, they are not moving ahead. Hawasongi. Wamekataa, so it is 16 and now 6. 34. So this is 34. 6, 16.64. Okay, so let me bring that figure here. Why are you rounding off? And how do I say it in a language that you understand? Florence, nitakwambia kijaribu. Please don't round off. You are still telling me I have rounded off.
Okay, excuse Mr. Dennis.
Yes, move on. Don't round off. I have to listen.
We are not rounding off. Like ukifeed the data kwa calculator inakupea that answer.
So it means that your calculator does not have the 4 decimal points. Sindio? The 4 digits to commission. Sindio?
Yeah.
Na wewe uone kama iko na shida haijafika 4. That is why the difference is there. Si unaona tu calculator yangu imekataa juu setting. Si ati Dennis is wrong. Ni calculator ndio imekataa ni vile nimeiset. Inakubali up to 3. Let us just move. Mbona tunakuambia hapa? Hii nitawacalculate hiyo decimal. Just calculate the rest. Naona vile nani amefanya? Masi amefanya. Amenipea tu hii, mimi nikajifanyia the rest. I'll do for you the whatever calculator I cannot do. Let's just move on. Calculator yako ni ya 4 decimal places. Ni 3, not even 4. So inakuamia hapa. Mimi nitaongeza hiyo ya mwisho. Yes, hapo inaeleweka. So we are on the 5th one. Let me percentage of this. It is your calculator. Kumbe Florence pia alikuwa na hiyo shida. Sasa hiyo utaangalia baadaye, tuendelee. The calculator should give you the full thing. It is up to you to decide from what point. Am I doing it 2 decimal places or 1 or rounding off, truncating? So ya Masi iko sawa sasa. Masi, are you sure? Yako imekubali? Which setting did you do? So we are having the same and I'm worried because I can see Ruth amenyamaza. Either amelala ama amepotea. Which is which? Wameenda kupika. Sasa tumalize haraka. Ya Masi imekubali kwa ama ameongeza. I don't know. Ruth akawapa sawa. Ruth, saidia wajirani, saidia. Kindly help Florence to understand how calculator is being set. I toa hili minus. No, we start with the installment. So what is the principal amount? This minus this. This minus this. You put up. This minus this. Masi, you can do that. So your Krista is giving 0.5. So Krista sasa iko sawa sasa. What did you do? Who is getting 0.5? Is it 0.5 or 0.3? Is it 0.5 or 0.3? Ya mwisho. Masi, don't worry. Usione nimetoa yako. I'm still waiting for somebody akatae that is not 0.5. Nani tena nakataa siri? Otherwise, I'll pick whatever Buzz has given me and move on. So we are having 1.9. $1.978 7 or 7.14, and it should be 3. So what did you do? What did you do? What did you do? Principal. So we have 64, 65 minus 33, 0.5, 0, 6, 1, 3. I expect the last figure to be something closer to this. 144, mwisho. 144.5. How comes now it is very far from what I'm seeing? Mbona inakaa mbali? This one, 64.65 minus 33.05. Oh, 33.05 is the interest. No, should be principal. So
Inafaa kuwa 47.50, not 64.65.
thank you. So you are right. So yeah, but gapi 145. So my 47. 140.
14.45.
We are okay now. So get me the difference between now this and this part over. This one is high level of accuracy, very high level of accuracy. Unataka hii pesa iishe at the end of year 5, tulipe yote at the end of year 6. Because we are paying loans, Leo. At the end of year 6, you're supposed to pay all. So ukibaki na 2 bob, 3 bob, 10 bob, tunasema no. That one the bank can get about. Lakini ukibaki na thao, hiyo ni mingi sana. What are you getting?
$2 million.
Why?
255.
Huh?
2,255,909.5020.
2 million. 0.0 point.
0.5020.
Are we all getting that? The end of principle imebaki 2255 909 sawa. So that is the principle that we are remaining with. Ikizaa tulipe inafaa iishe. So we have 2255 inazaa interest na tunalipa 5020. Haya. Florence, 14% of this is ngapi? Tuone hapo. Hii pesa imebaki itazaa interest how much? Sisi tutalipa tu hii. Anafanya calc. Haya, endeleeni. Percentage. Oh, yeah. Florence cannot do it. Ruth, can you do it for us? Maliza history. Yeah, 33, is it truncated? Should be more than 3303. So we are saying that the interest should be 315,827.3303. Now, get me the principal. Ukilipa hii, what portion of principal are you paying? This 2 point? Point 2? Angalia kama it is equal to the principal that will be going back in higher. The principal that you're paying here should be equal to this. So that tuseme ile pesa ulibaki nayo at the end of the year, umeclear hapa. Kuna 0. Kwanza kuna uchokozi. Tuendelee. Kuna uchokozi ndio maana waziri hawezi ongea siku hizi.
I'm getting 2255, 726.145 something.
720?
726.
Point. Point
145.
145. Okay. You can now see that the difference in capital. This one is 909. Point 909 point. This one is 726. What is the difference? Just take 909.5020 minus 726.145. So that amount is very significant because you are paying 2.5 million. Bank wakirealize umebaki na pesa yenye ni kidogo hivyo, like maybe 100,000, they normally assume that umaliza kulipa. So in exam, that small difference you don't show, just put dash. Kwa sababu you compare the amount that you're paying monthly in 2.5. The difference that you're getting here is just 200 something. That is insignificant. So you don't put the amount, just say put dash. So. And that is how loan repayment schedule look like. We're back in a place kadogo, but it can take 30 minutes to maliza hii topic. The worst part tumemaliza. This is the worst part for today. So let's take 30 minutes and then we finish the topic number 8. So let's proceed. You write real estate investment trust. You say that these are companies which buy and sell properties. That is the first thing. They are companies that buy and sell properties. Number 2. They are companies that buy and sell properties. Number 2. They are companies that buy and sell properties. Number 2. They sell their shares to the public through IPOs. They sell their shares to the public through IPOs. They sell their shares to the public through IPOs. The first one, I say that these are companies which buy and sell properties. Number 2, they sell their shares to the public through IPOs. Number 3, they are required to distribute all earnings as dividends. They are required to distribute all earnings as dividends. They are required to distribute all earnings as dividends. They don't pay corporate tax. That is the last one. They are required to distribute all earnings as dividends. They don't pay corporate tax. They don't pay corporate tax. The next thing is funds from operations.
Dennis, before you wrap, what is this you've nini umeweka kando, or is it market trust, or what is it?
Which one? A.
Hiyo hapo kando sijui market something.
Is
Then
that,
ndo ukaweka bracket.
have I written anything to do with market?
That is why I'm asking you, because umeandika ni kama umeiwayo hivi.
Okay.
Sielewi.
Real estate investment trust. Rates, real estate investment trust. The next one is the funds from operations. Funds from operations are also called FFO. Funds from operation, FFO. Then you say that this is the net income This is the net income. Excluding the net income excluding gains stroke losses. Yes, I owe. Initial purchase. I'm sure waziri anajua hii. Waziri inamaanisha nini? IPO? Initial purchase. Offering from sales of property. So we are saying that this is the net income excluding gains stroke losses from sales of property, plus depreciation stroke amortization. Stroke amortization plus depreciation stroke amortization, i.e. FFO, which is this, is equal to net income minus gains or losses plus depreciation stroke amortization. So if you are told to calculate funds from operation, FFO, just look at the statement, take net income, subtract any gain or losses, then you add back depreciation. Whatever answer you're going to get is what we call gains from operation. So let's think about illustration like this, where we are having net income, that is NI, to be 40 million, then gains is equal to 20 million, gains 20 million, and then we have depreciation to be 40 million. What is or let me just say determine FFO. We are going to say that FFO is equal to 40 minus 20 plus 40, which is 60. Still 60 million. Just simple like that. We have 40 minus 20 position. Let's look at illustration 2, which is the last one, and then we are done. Illustration 2. Illustration 2. Sana kwa hii topic number 8. There are some serious things that we can take time with, not topic number 8. So illustration 2. We say that consider a company with a current market value with the current market value of 375 million. Can you select 375 million? And price per share market price per share of 75 shillings. 75 shillings. 75 shillings. The following informations are also provided. The following informations are also provided. Statement of financial position. Then we have assets. We have liabilities and equity. So we have there cash, receivable, and property value. These are cash, receivable, and property value. We have here 500,000. Then we have 1.5. Then we have 170. On the other side, we also have short-term loan. Of 2 million. Mortgage 80 million. Equity 90 million. Pamoja. We also have income statement. Income statement. So we have revenue. We have operating expenses. We have depreciation. General expenses. Have management expenses. We have income from operations. Interest expense. then net income. So revenue we have 70 million. Then we have 30 million. $15 million. $4 million. $1 million. Then we have income from operations, which is 20 million. We have 64. And so we are having net income of 13,600. Additional information. Additional information number one, and additional information. You can say it here. Let's put here. So yeah, so the first one, growth rate. Okay, current dividend is 4 per share. Current dividend declared per share is 4 shillings. That is the current dividend that was declared. The current or the last, hakuna ingine after you. Hakuna ingine after you. So when you talk about the current or the last, they mean the same thing. Sasa Florence, Sasawa Edwin, and Jade.
Yes.
Yeah, ukiambiwa the current dividend or the last dividend, they mean the same thing, because once the company has declared dividends, the only thing we expect is the next dividend after another financial year. So the current is the last one that was known. So growth rate is also given here. That is number 2. Growth rate is given us 5%. And the cost of capital is given as 10.5. Cost of capital is 10.5. That is number 3. %10.5%. Cost of capital is 10.5%. Cost of capital is 10.5%. FFO multiplier. FFO multiplier. That is I adjust the board. Though I may mention that cost of capital is 5%. Then now the last one here is FFO multiplier is 14 times. FFO multiplier is 14%, 14 times. FFO multiplier is 14%, 14 times. So let's move very fast. I need to take 10 minutes so that to funge by 10:30. Okay, so required. The first requirement is to calculate EPS for the company. Determine the EPS for the company. So that is the first one. We need to know the EPS. So EPS basically means earning per share. So therefore EPS is equal to total earnings all over total number of shares. total earnings over total number of shares, ndio. EPS means earning per share, which is the same as total earnings over total number of shares. Now, from this question, do we have the total earnings? Can somebody get us the total earnings? Mercy, what is the total earnings that we have for this company? At the end of the year, ile earnings wanaweza enda nayo nyumbani ni ngapi? 13.6. Thanks so much. Good. And do we have the number of shares? We are not given. So the number of shares, how do we get it? Can somebody tell us how we can get the number of shares with the information that we have? Remember, for us to get the market value, it is the number of shares times the price, market price per share, which we call MPS. Sasa, market value or the value of the company is the same as the total number of shares times the value in the market for each share. So we are given market value to be 3.375. So we can say that the number of shares is equal to market value all over MPS, which is the market price per share. We have market price per share to be 75. So we have 375 million all over 75. So our number of shares are 50 million. Because those are the number of shares. So these guys, they were trying to give you the number of shares, but indirectly. So lazima ufungue macho na ujue, is it 50 or 5? It's 5 million. Eh? Lazima ufungue macho na uone. That is what they're giving you. Now we can come here now and say that our total earnings, we have 13.6 million. All over number of shares now, which is 5 million, and we are going to get there. What is it? Is it 2 point something? Can somebody calculate with that? What are we getting? 13.6 divided by 5. We're getting 2.72 million, cancel billions. That is. So our EPS, that is earning for one share. We have 5 million shares, but each share has got 2.75 shillings. That is the earning, the normal in shillings. How much in shillings? So that is the first question. The second question says that determine NOI per share. NOI per share. Now, I want to differentiate between NOI and NI, these two. The difference is that this one is after deducting. NI is the profit after interest and tax. After interest and tax. But NI on OI is profit less operating expenses. Or you say profit before interest and tax. Profit before interest and tax. This one is before interest and tax. This one is after interest and tax. So I'm sure that you have them there. So you can get what NI is. Are you even? That income from operation is now the NI. So income from operation is the NI because it's just the total income minus operation expenses. That is less operation expenses. We call it NI. And the figure has been given there. So we call it NOI. Sorry, NOI. So our NOI is just per share is now 20 million. You have it there, you can see still 5 million. So what are you getting? 4. It's in rice. The only thing that we are not deducted is interest. The next question is asking you to calculate FFO, which you have seen, FFO. What was the formula for FFO? FFO is equal to net income minus gains or losses plus depreciation. So our net income we got as 13.6 million. Do we have gains or losses in our statement there? There is no gains and losses. They are normally found on the income statement. We don't have gains or losses. So minus 0 plus depreciation, which is 15 million. So our FFO is going to be this one plus this. So that will be, was it 15 or 1.5? We're going to have 28.6, eh? 28.6. 28.6. 28.6. Tuko pamoja hapo? Si ni rahisi? Aya. They can also ask you to get FFO, that is funds from operation per share. FFO per share. That is the next one. FFO per share is just FFO that you have calculated a lower number of shares, which can be 28.6 million all over 5. What are you getting? Get me the figure. Thank you. 5.76. Then you have your price. The next thing is now to determine the value of investment using Gordon's dividend discount rate. Determine the value of investment. Determine the value of investment. Investment or company. Above using number 1, which is A. Using number 1 or A, Gordon's dividend discount rate. Dividend discount rate. This is the formula that says that P is equal to D into 1 plus G all over KE minus G. Still. So we have our, this is now the value. We have our D, which was said to be 4. Still. The last declared dividend plus 0.05 all over KE we are given us 10.5. So you have that 0.5 minus 0.05. Am I moving so fast? Can somebody get to the figure? So this one is the same as 4 times 1.05 all over 0.1. What is your answer? What are you getting as the answer? We only have 2 extra to finish our time in the figure. And we have this A, we have B and C. B and C hapo chini. So the hii answer haraka ndio 20. Surely. C ni 4 na hii ni 20. Hatuwezi pata hiyo. What are you getting? Unapata ngapi? Or kama hii nimecalculate vibaya, I calculate on your own way. So what are you getting? Itakuwa 0.055. Ndio. Hii minus hii. So it is 10 minus this one. I've done it for you. 76.36. So now guys, let's look at the other formula. So we are trying to get the value of the company using the first one, what was formula? The price per share. So this one is per share. You can now calculate the number of shares and get the value of the whole company. In a price for one share. Because the dividend was per share. You're tumetumia. So tumepata hii, the price for one share. Now you can multiply that with 50 million to know the value of the company if you use this formula. Because 50 million is the number of shares. Let's look at the second one and then the last one. The second one, you get the value of the company using, that is B, using FFO multiplier. FFO multiplier. So FFO multiplier. Now the value of the company, value is equal to FFO multiplier, which we have FFO multiplier times the FFO. FFO per share. So that is going to be the value per share. So we have multiplied to be 14. Here, FFO per share was 5.72. Whatever you're going to get here is going to be the value for one share. What is it? You can now get the total value of the company. Kama hapo unaweza pata total value. Total value is now 5 times 5.76. No, this is not the one that we calculated. This is FFO per share. So just get to the figure here. Unapata 80. 80.08. This one is per share. If you want it now to be for the whole shares, now multiply this. So total value of the company, just like the other one that I explained, total value is now 5 times 80.05. And the answer is going to be in millions. That is the total value of the company. Initially, tulipata ni ngapi? Hiyo ukicalculate tunapata ni how many millions? Or how much millions?
400.4.
We're almost done. Imebaki tu moja, simple kama hii. So nipe. Unapata 4,004.4 million. But whatever we were given in the question was the market value of the company. Ilikuwa 375 million. So you can see that the same company, if you use a multiplier effect, the value becomes higher. The one that we given in the statement was 375. But if you use the multiplier effect, is now 400. They are very close, so it makes sense. Even the one that we just done, where we got 76.36, you can multiply 5 million and get the value. See itakuwa ngapi, but maybe around 380 or 390 there. So it is a little bit higher than that. I just think so. Let's get the last one. The last question is to use net asset value method. Get the value of the company using net asset value method. Net asset value method, which we call NAV. We are finally done with the topic now. This method is total value minus total liability. Then we are going to get net asset. Net asset net asset is equal to total asset or total value minus total liability. Ndio. The value of the company is the asset that it has. So when you talk about total value, the same as the total assets. Total asset minus total liability gives you the net asset. So this formula of net asset value, which we call NAV, is basically like that. But how do you get the total value of the company? We can get the total value using the formula that we used. Use capitalization rate method. When you are using this, use capitalization. Were we given capitalization rate in the question? Capitalization rate. Nilikuwa nimewapea. Capitalization rate is 8.75%. I think I didn't give you that. The examiner gave that. Capitalization rate is provided as 8.75%. So you can add that somewhere under additional information. So with this, you can use capitalization rate to get the value of the company, which capitalization rate method tulifanya jana is equal to NOI all over capitalization rate. NOI was 20 million. All over capitalization rate, which is 0.0875. 0.0875. What do you get?
Eight point 75.
0.875. That is the capitalization rate, which is the same as 8.75%. Ile tulifanya jana. So you have NI, NOI all over R. That is the formula, capitalization rate method. What are you getting as the value using that formula? Unapata ngapi? 228,570. 228,428.6 minus total liability. What are the total liabilities that we have? So we have the value using capitalization rate method. Total liabilities.
$172,000.
Total liabilities 172. Liabilities are 2 million plus 80. Is it that one?
Yes. Yes, 10 million.
It is 2 million plus 80 million, not 8. Nilikuwa nimewapea short term loan was 2 million, mortgage is 80. Alafu kuna equity. So the liability are just short term loan or short term liability plus long term, which is mortgage. Equity is not part of liability. So ukiambiwa calculate total liability, just remove equity, the balance is that. So total liability was 2 plus 80, which is giving you 82 million. So here we have 228 million, right? So that means that our now is equal to 228, 571.7, 426.6 minus 82 million. What are you getting? Upper, it should be 6, 1, 4. Thank you so much. That will be the end of this topic, topic number 8. We shall do a few revision in topic number 3, just revision, but in the meantime, we need to move to topic number 4 in our next class. We need to do some revision in topic number 3, like 2 or 3 questions, or as long as the time can allow. We shall do many revisions. Malizana hivyo. Good night. Any question? Kuna watu wamenyamaza, hakuna mwenye anatoka. Mmenyamaza tu. Kwa sawa. Good night, Krista. Then thank you. Keep on revising. I hope that our cat has shown you where you are. It has placed you in your correct corner. Utajua kama uko bado kidogo ama umeiva. Ndio.